Today I'm going to be teaching fair value gaps with this trade. So we'll start with the daily, and this is Luxaga's New York session, London session, all those sessions. Clear everything from the charts, start from scratch. All right. So on the daily, what do we do? Previous days. Today's Thursday. I'm pretty sure. So we mark previous day's low on Wednesday, and if it was close to high, we will mark high. We mark the low. Let's go to the 4 hour. Nothing on the 4 hour. We go to the 1 hour and we do see liquidity buildups right here and right here. Go to the 15 minute, just gives you overall sentiment. Um, 5 minute, you start getting into entry zones. We play everything off the 1 minute, and I'm turning the indicator back up. So at 6:30, we always market opens for options and all that. I have it marked out with this blue line. What I like to see at 6:30 usually is a sweep of London high. So we'll mark out London high. This is a key level. London high. Okay. Before the merge happens. So anything before this is the levels you want to watch. So we have London high and then we have London low. Okay. London low. When it sweeps one of these, we always wait till buyers start stepping in. Why did I not enter off of this? This right here, you have to realize that buyers take time to build up. It's going to still fall a little bit. So usually when it does a failed PD array, the next one usually does work, unless you're playing off of strictly market structure shifts, which in this case would be, I'll get into that. So right here, London low's been swept. Buyers start buying, buyers start buying, buyers start buying. And right here, buyers start buying a big thing. And once we start seeing like big candles like this, like equaling this, move down, we can start using PD arrays and treating it as a market structure shift. On my last video, I put this as an inverse fair value gap. I said this is what TGR is teaching, and I'm going to put the same stuff here. So let me fix alignment. I'll do center bottom, and I'll actually do right bottom, so it's easy to see. So inverse fair value gap. This zone from here to here, wick to wick. If you don't know what a fair value gap is, they're super simple. You can search it up on YouTube. Okay. What happens is the candle closes above it, invalidating this fair value gap and turning it into an inverse. And right away, what do we see? A retracement back into the zone. So what happens? Once we get a retracement back into the zone, preferably if you're fast on your hands, are going to get right there. But if you're a little bit slow, you got a better entry today. Your stops are always going to be at the lows before the shift. And targets are usually high of day and low of day. Okay? So 6:30 right here, this is high of day. And if I drag it out, it may have a reaction. I don't recall, but did not. So in this case, it pushed up to London highs. London highs, if you recall, is right here when we chart it out. What happens at London highs? It starts selling off. People start taking main profits off. So that's the strategy for today. But if you're still watching, I'm going to show you fair value gaps. Fair value gaps are just like, if this played in and it went lower, let me get a little thing so I can do this. If this pushed into here and the 50% of this gap, And let's just say it didn't go higher than this half point line. Potential is it's going to go down. Okay. But when it gets invalidated and you have a liquidity sweep, usually, which means you're taking people out of the market to reverse into a different direction, this now becomes a fair value gap. Okay. So now that it's inverted, now any bullish gap should work. So now that they're being tapped into right here, what does it do? It breaks above, creates the gap. What does it do? Retrace. See, it struggles a little bit and then bounces. Okay, we go forward throughout the trade. We go right here. What does it do? Retraces, barely taps in right here. Okay, that's how you know you're in the right direction if you're trading. If it's respecting these gaps, very like to the T, which means it's right when it touches, it creates a T. Either you're going short, creates a T like this, and then goes down, or you're doing long, it touches it like a T, goes like that. So there you go. You know a little stock knowledge now. What happens right here? It pushes higher, creates another 1 minute fair value gap. What does it do? It pushes higher, yes, but it closes above this one and inverts it. And a little bit of consolidation right there. You can see overall it did respect this. And then so on and so forth. We get to London High and we start selling off and disrespecting stuff. But yeah, like if you follow this key stuff, like I'm teaching you guys, every guru is teaching the same thing. I'm going to be teaching the same thing. They're going to be teaching the same thing. The difference is if you guys buy my Discord or whatever, I'm going to be teaching the same stuff on YouTube. I may not post as much on YouTube. I may be more consistent on Discord because, it's making me profit. That's how people see it. I'm actually genuinely teaching you stuff and I'm not trying to scam you guys, honestly, which is actually a big statement because it is for money. And if you do fail, I still make money. So take it how you want. But yeah, next or Friday, depending if there's a trade, usually there always is a trade every day, I will show market structure shifts. And I feel like market structure shifts along with breaker blocks because they correspond and it's going to be really simple to teach and gives a good starting up for order blocks, I guess. Me personally, I'm keeping honest, like order blocks for me are still pretty hard to like identify, but it'll just come with natural time in the market. But you can see I had a line right here, I just deleted it. This is a small profit taking, and then this 1 hour liquidity is where it started to reverse, and I don't know where it ended. Ended almost back down here. But the trade was 2.77 risk, 100 point stop loss with 278 points. I'm not scalping, keeping it clear. I'm day trading. So these positions are held for longer. So that's why when I enter a position, usually they're limit orders. So let's say, hopefully I could do an order. I know market hours are off on this. Let me just turn on paper trading. Paper trading. Where's paper trading? But yeah. So if I were to set up a limit order like this, um, let us pull this down. Okay. Let's just say we buy. That's off trading session, whatever. But if I set a limit order and it triggers and my stop loss is right here and my target is right here, I don't really trim. Being honest with you, I hold my positions till I take profit. And well, it usually works for me. Um, yeah, once you have your limit order set up, you're good. You don't need to stare at the computer nonstop, like because when you're staring at the computer, that just means they're so like emotional with their trading. And if you could walk away, trust your strategy, like you're gonna be fine. Like you got to think about it this way: what's happening all along here, you can't control. You literally just cannot. No matter what you do, what you think, you're not controlling this. You're one contract, 10 contracts, two option contracts, 10 shares. They don't care. Because why? There's market people that are controlling the market with 1,000 NQ contracts. One point is $20,000 or $2,000. Like imagine banks, 278 times 2,000. Okay, add three zeros, $278,000. That's why this is a hard skill. Okay, just being straight up honest with you, and I'm gonna end it there. But my Discord's in my link in the bio of my YouTube. Subscribe, like, comment, whatever. But yeah, that's it for me. Clock off.